If you're planning a trip to America or even Europe, or if you consume imported goods, then you've got reason to celebrate the rise and rise of the Australian dollar. It's even been a factor in keeping interest rates on hold, but not everyone is celebrating the upward march of Australia's currency, which hit parity with the US dollar on Friday night before falling back slightly. It's the highest the dollar has been against the greenback since it was floated back in 1983, with most analysts predicting it will soon pass the value of the US dollar, quite possibly for a sustained period. The Treasurer Wayne Swan argues the soaring dollar reflects the strength of Australia's economy, but some significant sectors of industry are hurting. Business editor Greg Hoy reports.
For just 10 seconds Friday night, the free-floating Aussie dollar made history, reaching parity with the great US greenback, a taste of what's to come, once unrivalled amongst all monies minted globally. Recent overprinting of the greenback to pump money into the spluttering American economy has weakened what was the prestigious global reserve currency, stockpiled for security by the world's central banks.
The Australian dollar is becoming more on the radar screens of global central banks as a reserve currency. The Australian dollar is offering the highest interest rates. More than 60% of Australia's exports are commodities. So when you've got the combination of very strong growth coming out of Asia, lifting commodity prices, the US economy is weak and the Australian economy is strong, currency volatility is low, you've got the perfect cocktail mix to lift the Australian dollar up and through parity.
So, to parity and beyond, boosting the nation's shopping power.
Clearly anything that's imported is going to have an advantage from a retailer's point of view and a capacity to be offered at a lower price.
Bargains galore, and not just for shoppers. But there is a big flip side to this coin, easily overlooked, with the patriotic pride over the dollar's ascension.
Customers in Australia now will be more inclined to be searching for offshore supply than domestic supply.
Brian Rush employs 250 Australians manufacturing defence apparel for local and overseas markets.
As it's a labour-intensive assembly we're involved in, the savings are quite substantial from buying offshore. We'll have to really ask ourselves for how long we can manage the level of domestic manufacture that we're involved in.
The greater the dollar's gain, the greater the pain for Australian exporters large and small. Foliar Australia exports native flowers to the US, Europe and Asia.
In cut flowers, there's a lot of competition in specifically places like Europe. For our customer overseas, they're choosing to buy other products rather than Australian products.
Is it not possible to just take the pain and reduce your margins?
It's not about reducing margins. In the flower industry, we all work on tight margins anyway. We have to be smart and reinvent our business in a lot of ways.
The same tale is told across the land, the heartburn particularly pronounced amongst the nation's cattle farmers.
The rise in the Australian dollar is just eroding the value of those cattle. For every cent that the Australian dollar climbs against the US, it costs the Australian cattle industry in the area of $50 million for every cent.
The largest exporter of meat in the world, 2/3 of Australia's production is now exported to over 100 countries. Richard Rains of Sangers Australia handles 7% of those beef exports.
From the seat that I sit in, the weak US dollar is benefiting their exports of meat around the world, Greg. So they're now, although they're the second largest export market that Australia has, and an extremely important market, they're also becoming a fairly solid export competitor of ours in the world market, and there is no doubt that the weak US dollar is benefiting them.
And the economic grapevine is abuzz with similar stories.
We've got significant competition in the marketplace. When the Aussie dollar appreciates, they have a very simple response to us, and that is that we can buy it from Chile or Argentina or Australia, so you meet our price or don't sell the wine.
The surge in the dollar is placing enormous pressure on the nation's $5 billion wine industry, employing 60,000 people. This industry exports up to 60% of its product.
A 5-cent appreciation of the Australian dollar against the US and equivalent across all markets strips out about $100 million in terms of value out of the Australian wine industry. If you look back 2 years, we were a $3 billion export industry. Now we're a little over $2 billion. Now the changes aren't all exchange rate related, but probably the single most important factor in terms of our competitiveness has been exchange rate changes.
So what chance a benevolent government might intervene to restrain the dollar's ascent? Well, Buckley's or none, basically. In an economic note released on the weekend, Treasurer Wayne Swan said intervention to devalue the dollar would be counterproductive, driving up inflation and interest rates. And the minutes of the last Reserve Bank board meeting released today concurred, suggesting the rise of the Aussie was a factor in the line ball decision not to hike interest rates earlier this month.
If an appreciation in the currency is at the margin discouraging the RBA from raising interest rates that one extra notch, then that's a benefit probably to 95% of the economy, whereas a high Australian dollar upsets 20% of the Australian economy who are exporters.
But try telling that to exporters.
Look, I don't follow that one iota, I'm afraid. The desire is to produce more and to export more. But exports are paramount to our economy.
Regardless of such sensitivities, even those feeling the heat of a rising dollar seem resigned to a future at the mercy of the open market.
They could depress the dollar a bit, it would help. But I can't see that happening. It's like free trade. We seem to be in the South Pacific as trailblazers on free trade, but not necessarily fair trade.
I don't believe that we need government intervention in these issues. That's what a free market is all about. It's just unfortunate that it is biting us, and biting us so rapidly at the moment with the rise of the dollar, and I'm just fearful that it might keep on going.
And keep on going it will, it seems, as long as commodities keep on booming.
It's quite likely the Australian dollar is going to be high for quite some time. We've got $1.02 in our forecast, but I think the Australian dollar could range a little bit higher than that, up towards $1.06, $1.08. The Australian dollar could certainly go another 10% above parity or something close to that before coming back down.
The mining boom won't be around forever, but what will be left when the mining boom is gone? And that's the big challenge for us, and it's the challenge for our governments as well.
Business editor Greg Hoy.